was just having a conversation with someone in my network, and he was telling me how basically businesses right now, he was talking to a banker today, and the business line of credits right now are drying up because the banks are scared that so many small businesses are basically month to month. And I was talking to someone who recently bought a commercial landscaping business, and what ended up happening is he bought the business in November because the bank kind of screwed him over. They were supposed to close in October. So what ended up happening is in October, you get landscaping revenue. In November, you don't. And then on top of that, this has been the warmest winter ever in the Northeast. So he didn't get any of the snow removal contracts. So now he went scrambling basically for the last 3 months. And he's paying like 18 to 20% interest on some of these line of credits, but he really doesn't have a choice. He's got to keep that business afloat. He just bought it 3 to 4 months. So something like this is perfect for a situation like that, because I think the last time I took a policy against my loan was 2-3 years ago. I think I was paying 5%. What are the current rates for someone tapping in these days?
5.7% right now. And I'll add to your story. I'm one of the folks that, and maybe there are some folks on the call too, that lived through 2008, 2009. It was bad. We've had a heck of a run. From 2012, I would say, straight through to 2022. It's a little bumpy. There's still opportunities now, but we've had quite a run. It's been an unbelievable run if you just look back at it, right? In just the real estate space. But I remember what it looked like in 2008 and 2009. And there's a lot of new people in the investment world that's come into our space. And I always say, I saw it all. Suicides, divorces, bankruptcies. Like, it was bad. What were some of the things that made it so bad? Liquidity dried up. And I was one of the folks that were fortunate. I didn't get clobbered as hard as most people. Look, you didn't come unscathed through that. Right? Your net worth went down during that time. If you had real estate, you took a couple of punches. Some of us got knocked out. I didn't. I always said would have made a better story now if I did, but I didn't. I was lucky in a way. But one of the things that I learned, my biggest lesson, was I saw how quickly liquidity dried up. And I had HELOCs. That HELOC was gone and you couldn't find anything. When it gets bad, and it was really bad, and I'm not saying it's going to be like that again, but markets go up, down, and sideways. It's all cyclical. So when it is in a situation like that again, it gets really hard and really bad. So one of the things that I said to myself is, I'm not going to put myself ever in that situation again, because I saw folks that did have access to capital pick up assets, and I lived in Chicago during that time.